kick things off with Bob Pisani live on the floor of the New York Stock Exchange. Hey, Bob.
And Melissa, we had a tough day here. I want to give you a sense of what happened last time China devalued its currency. This was about 5 years ago in August 2015. The last time China devalued its currency was in August 2015. That happened on 3 consecutive days of devaluations. That was beginning on August 11th. The market was very different back then. It was a different picture for the overall markets. China's currency was appreciating back then, and that's a big difference than now. The stock market in China was just roaring. It was up about 40%, the Shanghai Composite, in the first half of the year through June. But then the economy began slowing down, and the Chinese stock market simply collapsed after June and into early August. By August 11th to 13th, they started the devaluation. The S&P here didn't react too much. We were only down about 1% on that first day of the devaluations, but then our markets dropped about 10% a week later. It rallied back, but the big deal was it was sort of acting in concert with other global markets. It wasn't just China. There was issues out there of fear of interest rates being too high, similar concern today, and the global economic slowdown that began manifesting itself around that time. The yuan devaluation of 2015 is also famous because it weakened other emerging market currencies, and it also led to a big drop in commodities. So, for example, oil dropped 30% between July and August. Copper dropped nearly 20%. And I think the concern here, Melissa, is that the added component here is that the trade war is very, very real right now. That component wasn't nearly as front and center in 2015 as it is today. So we have a new overlay that's making people a little more concerned. Back to you.
All right, Bob. Thank you, Bob Pisani. So with all that said, is 2015 any sort of a blueprint of what we can expect going forward here after today's massive sell-off? What do you do with your money, Guy?
Yeah, I think it is. And we've mentioned August of 2015 a number of times on this show. And go back, do a little history lesson and see what happened by February of 2016, if you recall. The S&P was cratering down to 1810, bottomed on the day when Jamie Dimon announced at $54 he was buying J.P. Morgan stock. We had something come out of OPEC, I believe, that night. And there was also a Deutsche Bank bond offering. Those 3 things pointed to the bottom of the equity market. But in my opinion, I think you're in for a couple months of some rocky roads. I don't think today is it. We can get into any number of reasons why. But I think the small caps have been telling you this. And quite frankly, I think the gold market has been trying to tell you something for quite some time.
If today is not it, what else is there?
Well, there's ripple effects, right? I mean, so I think you have to ask yourself the question of what else is going to go on out there, right? So we're in a currency war of some sorts. So what does that mean? You know, you look at Korea, the Korean won had a big move today. A lot of the other Southeast Asian currencies had a big move today, and it's going to force all of them to devalue as well. So there are ripple effects to that. You see our bond market, people coming in and buying bonds. What do you buy in this environment? You buy bonds, you buy gold, you buy Bitcoin. All of those were up today, and I think you can still stick with that playbook, at least for the time being, because we haven't seen all the ripple effects.
We don't have a Fed funds futures for currency devaluations.
No, we don't.
We don't know if the U.S. Treasury is going to step in. There's no way of handicapping, is what I'm saying, what the next play is. So how, in that scenario, do you invest in the stock market?
Well, let's hope. Let's hope in some case that we know that history doesn't rhyme; it tends to repeat itself, and let's hope that history repeats itself in terms of how we approach our currency on the global stage, which is not to go in there and devalue it. And you talked about 2015. I think it's important to understand the context. In 2015, this is pre-Brexit. This is pre-protectionist around the world, pre our elections, pre a change in stance on how we've been using sanctions and trade restrictions in addition to tariffs in a global environment where every other country in the world has started to do this themselves or is reacting to what we have done. So you talk about the setups and think about why we were so scared also in basically June to August of 2015 is that when China begins devaluing the currency, whether you believe it's warranted or not, and they're going to claim right now is warranted, you have a case where it means massive risk of capital flight. It means if you think about China's economy, which everybody knows has significant debt and credit issues behind it, the fear of capital flight, the fear of a disorderly depreciation, I think is part of what's weighing on markets.
So the bottom line of that is that the setup for this time around is worse.
Right. Significantly worse.
Significantly worse. How are you feeling today?
Not very good. I try to really take a step back. That's, on a day like today, I'm long. I'm always long oriented. I always have long exposure. So a day like today, this is just blood everywhere. But what I try to do is think about, okay, what do I want to own? What do I think could really get overdone? Right. So I'm not out there buying today, but I do have some things that I really do think I want to own at better prices. So Google, for example, has reversed almost, not quite, but almost that entire run up from their earnings. So that's one I would want to buy. I think Bank of America, the most U.S. centric of the banks, I think that's looking pretty good. I think things are starting to feel a little bit out of control, right? And that they could get more out of control. And so that concerns me. The one thing that I had that worked today was S&P puts, which I've always talked about. You need to have the protection, particularly 2 weeks ago. They were practically giving it away. So now what do you do with the VIX here at 24 and a half? That to me is actually a little more difficult of a decision than what do you buy?
Totally.
Because these things could just get shellacked, right? Mm-hmm. So I'm thinking tomorrow it might be a little bit worse. I'll probably start to sell some of those, as difficult as that will be.
We have probably new viewers tonight, and this is going to sound somewhat counterintuitive, but most everyone wants the market to go higher. And if you do, you want tomorrow to open lower in a meaningful way. And what is that meaningful way? Well, go back and look what the S&P low was on, I believe, December 24th. It traded down to 2709. 2509, give or take. 2509 on the lows. Recent high in the S&P was 3025, give or take. So a 50% retracement of that entire move is about 4% or so from here, which is not unreasonable to think we can't make over the next couple days. Puts you in around 2720 in the S&P 500. In my world, that's a huge support level. And quickly, I don't want to get too wonky on this, and I don't know what the answer is, but I don't think it's the Chinese necessarily devaluing their currency as much as it was them no longer supporting their currency, which is nuanced but important.
Well, I think that is the key question for this market. Is this a currency war or is this a currency crisis? And there's a difference between the two. A war implies the Chinese have control over the currency. A crisis implies they are beginning to lose control, which means that the ripple effects into the equity markets, into the stock market, will go on for longer than we expected if things just stabilized here.
And I would just say that China, for the last 5 to 10 years, whether it's MSCI inclusion, whether it's commodities settled in yuan or renminbi, whether it is seeking to have Beijing and that part of the world be a clearinghouse for global securities, China is doing everything they can to basically become a global reserve currency. So to think that they're, kind of nilly-nilly, kind of throwing around some numbers here and deciding let's play. I think every move here they see as critical. And I know that may be, no kidding. But for people that think that China's going to mess around, I think it's very clear that the capital flight issue is a very important one. And what Karen said, just in terms of smart things that she's doing in terms of options, one of the things that I think you should not be doing in this environment is people tend to add a lot of bells and whistles to a portfolio. They tend to gross it up. They start to put on some hedges against things that don't necessarily make sense. Simplify. Don't get more complicated at a time like this.